How's it going, everybody? So in this video, I'm going to talk about how to get a mortgage with no down payment and bad credit in Canada. So before I get started, please subscribe to my channel if you haven't already. I do appreciate the support. It helps my channel grow. Please follow me on Instagram, Dylanberg999. So the question is how to get a mortgage with no down payment. Now, there are ways to get mortgages with no down payment. You just have to find the right lender. The right lender will give you a mortgage with no down payment. The only thing is generally they'll want some form of collateral. And on top of that, they're gonna have very, very high interest rates too. So, and that's another thing, even if you could get approved for a mortgage with no down payment, I would never do that. Here's why. The point of a down payment is so that your payments in the future, or your payments once you get the house, will be lower. I always tell people, always aim for at least a 30% down payment. Don't ever go with a 5% down payment, ever. 10%, no. 20%, maybe. 30% down payment. Now, if you're like, hey, I don't even have enough money. If you don't have enough money for a 30% down payment, then the chances are you don't have enough money yet to afford that house. So really, really recommend going with a higher down payment. Let's say you go with no down payment. Let's say you buy a $400,000 house. That's what houses are where I live anyways, for like a pretty nice house. So you have no mortgage. So you have no down payment. So your mortgage is $400,000 a month. That comes out right now with the interest rates, roughly about $2,200 a month, which is astronomical. Unless you're making $100,000 a year, which probably most of you, if you're watching this video and you're trying to get a mortgage with no down payment, I guarantee you're probably not making $100,000 a year. Let's say you're making $40,000, your wife's making $40,000. That means every 2 weeks, you roughly get about $1,200 take home. So in 1 month, you will make about $2,400 in your pocket. Your wife, another $2,400. So that's $4,800. That's okay. Here's the thing though. If $2,200 is going towards your mortgage, you're gonna have nothing left to spend that money with. Half of it is gone towards your mortgage. You're not even accounting for taxes on your house. You're not accounting for insurance on your house. You're not accounting for your power, your gas, your water, your maintenance, if anything breaks, shingles. There's so many more things for owning a house than just having a mortgage. And I always tell people that. So $400,000, your mortgage is gonna be roughly $2,200 a month. Let's say you go with 30% down payment, which is a lot, it's $120,000. You would have a $280,000 mortgage. You would owe per month, you would owe roughly $1,300 per month. So $1,300 versus $2,200, you're gonna be saving $900 a month by increasing that down payment. People get themselves in big trouble by taking either too big of a mortgage or not enough down payment. Basically same thing. They get in trouble by taking on too big of a mortgage. And I've seen lots of friends, lots of people that I've known. And what happens is if something happens, let's say someone loses a job, they don't have the emergency fund, they can't fund that for a while. What happens is they have to sell instantly. And what happens when they try to sell instantly? They don't get top dollar for their house. And I've seen this happen lots of times. So let's say your house is worth $440,000, but you got to sell it now and it's not selling. So you lower it $430,000, $420,000, maybe you settle on $410,000. So you just lost $30,000 just like that. So please, a lot of people say buy the biggest house that you can afford. Banks will give you a mortgage with a 40% debt service ratio, which means your debt per month, your spending based on your income can't be more than 40% of your net income or your gross income, which is stupid. So what that means is, let's say you make $10,000 per month. If you spend $4,000 per month, the bank would give you a mortgage for like $4,000. So really, 40% service ratio. It's absolutely insane. I would never go over a 20% debt to service ratio, but that's what I recommend. big down payment. If you can't afford that, then keep renting and keep saving up. Eventually, if you save enough, you will have enough for a house. So end of video. Thank you so much for watching. Please subscribe to my channel if you haven't already. Please follow me on Instagram, Dylanberg999. Thank you.